Wall Street paring its losses Tuesday afternoon. Wild session. Dow was down about 550 points at the open. S&P still down now for the fifth straight session. Let's get a read on these markets. We're joined by Dryden Pence. He's Chief Investment Officer at Pence Wealth Management. Welcome, Dryden.
Thank you, Fred.
Oh, right now we've got all three major indexes trading below the 200-day moving average. The NASDAQ is down about 9%, just off correction territory. As you see it, are we headed much lower?
Well, I think we bounced off 2,700 today. We kind of touched that and bounced off it a little bit. I think you're going to get some continued volatility between now and the election. You could see a moment where we drop down a little further. But if you look at the last couple of times we've had these rapid sell-offs, they go down 10 or 11%. And then somewhere between 60 days and 200 days, we've recovered back to a new high. So I think we might see a little further drip down when we get to the election, but then I think that's around a tradable bottom or a tradable area, and then you can move forward from there.
Okay, so keep an eye on the election. That may be the inflection point.
I think you could see another leg down at that moment, but I think it's going to be muted because we've already come off the highs about 7.5%. That's where we kind of touched today and bounced off of that. So you might see another leg down. It could, 4 to 5%. But then at that moment, you get into kind of a bottom to the market. Bottom's kind of a tough word to say right now, but you get this moment where the market valuations come back, and it makes a lot of sense. It's a purchasable moment.
Okay, so sometime after the election then. Dryden, let's get a read into your investment philosophy. You've got an interesting background. You're a colonel in the military service. You are an expert in psychological warfare, and you employ it in your strategy in investing, coming up with what you identify as choke points, which I think is in military terms. So tell us how it works and how that'll help you arrive at a core holding.
Exactly. We don't look at sectors, we look at behavior. We try to figure out what consumers are going to do based on their fundamental needs and their fundamental desires. So we study that, we look at that, and then we try to identify what we call a choke point, which is a company that's a point in place in time where you have to use that company to perform the behavior you want, to fulfill the desire that you need. And so when we identify those companies, they tend to have excess earnings because they have pricing power. They're kind of like little monopolies. You got to use them. They can squeeze out some more pricing power from the behavior, and that gives them excess earnings and moves forward.
So how many companies do you have in this core, and how did you arrive at those companies, identifying them as choke points?
That particularly, it's about 19 companies. When you think of the behavior of, say, e-commerce and e-tailing, everybody buys things online. And that's the most rapidly portioned part of retail behavior, right? So we're making more money than ever before. We're buying more things than ever before. How we do it is typically online. And there's companies you just have to use to do that.
Such as?
Well, if you're looking at them, you're going to use, you probably have an Apple or a
Windows.
Microsoft product, exactly. And then you're going to use either AT&T or Verizon, and they use Crown Castle and American Tower for the towers that work. You have to have the towers. And then usually online is usually Comcast or Charter. And then you go online and you buy something. Well, you're either going to do a search on Google, see it on Facebook, buy it on PayPal, or you're going to use Amazon, right? And then how do you pay for it? Well, there's typically 4 big credit cards. Visa, MasterCard, American Express, or PayPal. And then how's it get delivered?
UPS or FedEx.
Exactly. And so when you take that group, 18 or 19 companies, what most people are amazed by is you can't buy online without using those companies. And you use one or more of those, and they're so dominant that's about the sales are $1.4 trillion. That's 7.2% of total US GDP. Those would be the 12th largest economy in the world.
Speaking like a military man identifying choke points that you have to go through.
Exactly.
So I guess when you identify those sort of companies that you can't live without, you can strip out all the noise that's in the background? What happens when those stocks go down?
Exactly. When the market gets volatile and everybody's overreacting and overreacting to fear of pain, if you will, it increases some volatility. But what happens is these companies, sure, they'll be moved around with the volatility, but in the end, their earnings are going to recover from that. So when you see these moments, these inflection points, we think that that's a good time to buy if you don't own them, or don't worry about it and just hold all the way through.
Set and forget, huh?
Exactly.
Pence's points, maybe we'll call it that. Thanks a lot.
Exactly.
Thanks a lot, Dryden. Our thanks to Dryden Pence of Pence Wealth Management. I'm Fred Katayama, and this is Reuters.